Often businesses want to continue growing and expanding. This means that the business may need to change its structure in order to foster this continued growth. One way of doing this is by becoming a PLC. In this video, we'll look at what a PLC is and the advantages and disadvantages of becoming a public limited company. A PLC is a public limited company. It's called this because the business sells shares to the public on the stock market. When the public buys shares in a company, they become a shareholder. This means that they own a tiny piece of the business. The more shares someone buys in a business, the more of that business they own. For example, Elon Musk owns around 155 million shares in Tesla. This gives him about a 20% share of that business. The rest of the shares are owned by other individuals and companies that want a piece of Tesla's success or Tesla's failure. At the time of recording this video, you can buy one share in Tesla for around $300. This would mean you own a tiny piece of Tesla as a company, but in comparison to Musk, you virtually own nothing. So, why is deciding to become a PLC a good choice when you want to grow your business? Well, there's a few advantages of becoming a PLC. The first is raising money through share capital. When a business sells its shares, this is known as floating on the stock market. When you float your shares on the stock market, that raises money for the business. The money they raise from the sale of shares can then be used by that business. The business will often use that money to reinvest back into the business to help it grow. It may be starting a new project, looking into new areas of investment for the business, looking at a new product range, marketing. Could be anything the business wants to use that money for to help it grow. Another advantage of becoming a PLC is that it gives the shareholders limited liability. This means they cannot be held personally responsible for any losses the business incurs. Let's use Elon Musk and Tesla again as an example. If Tesla gets into huge amounts of debt and owes institutions a lot of money, Elon Musk is not personally held responsible for that debt as he has limited liability through the PLC. This means the banks can't come and take his house and his personal assets such as cars, jewellery, watches, etc. to collect that debt. He is not personally responsible for that debt. Tesla as a business is. This is massively beneficial as it makes the risk of you losing your home and your livelihood much less when owning a PLC. It may also subconsciously make you take more risks as you know you won't lose anything personal to yourself. This in itself could help the business grow. Another advantage of being a PLC is it gives your business credibility. A lot of the time PLCs are looked upon favourably by banks and also suppliers. If you're trying to get a contract with a large supplier, being a PLC may give them confidence in your business, as PLCs often have to jump through more hoops than, say, a sole trader, for example, giving him that air of credibility. So, becoming a PLC sounds great for growth, and it's got those benefits we've discussed. But like anything, there are disadvantages of becoming a PLC. The first being increased scrutiny and regulation. Often PLCs have more complex accounting procedures to follow, as their finances often have to be very transparent so their shareholders and stakeholders can see where the money is being spent and what's happening with their investment. Being more transparent and having very clear procedures often comes at a financial and time cost to the business, which is obviously a negative of a PLC when compared to sole traders and other business structures. Becoming a public limited company can be expensive, often requiring a minimum of £50,000 in share capital to get started. Again, this is something other business structures don't have to deal with, as it's simple to become a sole trader or even a limited company, as just registering with Companies House costs around £12 in the UK. This is significantly less than the £50,000 required to become a public limited company. Finally, shares are notoriously volatile, and if you float your shares on the stock market, sometimes you can't control whether they go up or down. A business's share price can change regardless of their performance. They could be making lots of money still, but if there's negative press, there's a recession, this can all impact the business's share price, making the value of your business go up and down depending on its current share price. As I record this video, shares in Apple, Tesla, Google are fluctuating in price based around concerns about inflation, a recession, and the cost of living crisis. Apple may still be performing well, but these things can negatively impact that company's share price and are often out of their control. This is a definite disadvantage of becoming a PLC. However, despite all this, some of the largest companies in the world operate as public limited companies. So Apple, Rolls-Royce, Barclays. These companies all take advantage of what a PLC has to offer to them, and operating in this way has definitely helped them grow. Thanks for watching the video to the end. Don't forget to hit the like button and subscribe for more weekly business videos.